what makes fair value gaps A plus? What makes fair value gaps high probability, right? So again, fair value gaps themselves are used by basically all the traders these days, ICT, SMC. There's a couple of things you want to use. So fair value gaps, you want to be trading them on the 15-minute time frame, right? Or the 1 hour time frame or the 4 hour time frame. In this case, because we're looking at lower time frame scalps or lower time frame trend exhaustions, I'm going to use a 15-minute time frame for fair value gaps. So fair value gaps have to be on the 15-minute time frame. They need to be above the daily opening price because this is going to be a bearish scenario. So a bullish trend has been exhausted. So you want to be above the daily opening price or DOP. And the last thing you're looking for is you want to see liquidity being swept. And so what do I mean by liquidity being swept? So there's a couple of ways to look at that again. You want to see the Asian high and Asian low being swept. But more importantly, if we take a look at this POI, this fair value gap, right? Take a look at what actually happened. A lot of trend exhaustion comes down from understanding the correct overall context of the market, right? What is the market telling you? So when we have this previous day high like this, right? This was equal highs and this was the previous day high. In this case, this was Friday. So Friday, we come into Monday and Monday aggressively swept Friday's high. So these are the previous day highs, and this is my favorite kind of liquidity sweep, right? When you see a previous day high liquidity sweep, right? In this case, it's going to be PDH, right? When you see a previous day high sweep, this significantly increases the likelihood of the fair value gap playing out, right? Because we've swept liquidity. So when you see a fair value gap, you want to qualify it with some kind of a liquidity sweep. So you want to see liquidity sweep, you want to see a fair value gap, and you're looking for some kind of structure break. So in this case, you see a structure break over here. So structure low, structure high, structure low, structure high, and then we have a break just over here. So this is now how we form a trade exhaustion, if that makes sense. You want to see what's going on in and around this fair value gap, right? This is the most important thing. And so when you have a fair value gap, the next thing we do is we go down to order flow. And so order flow is kind of that missing piece as to what's going on.